Me and Matt now.
I got booted from the Discord actually just the other day.
You're still in the Discord, or you're not?
I mean, I don't. I see only the verify and start here channels.
Oh, no.
But I used to see like the other stuff as well. So I just like a couple of days ago I was.
You got to verify with Blofin.
Blofin.
Blofin, Blofin.
Yeah, the Sui Dex.
No, well, Blofin isn't. Do you mean the Sui Dex?
Well, you can verify with Bybit as well. There's a few different
centralized exchange. Blofin.
Okay. My bad.
Verify with Pionex, Blofin, Bybit, and Bitunex.
All right.
Anyways, welcome to the show, everybody. This is the Moon Boys podcast. My name's Theo. I'm joined today by Justin, Phil, Coke, and Matt. How's it going today? Everybody all talk at the same time.
Hey, what's going on? Hey, guys, good to be here.
Right on. And nothing here is financial advice. We are not financial advisors, just some guys on the internet.
And I'm retarded.
And Matt's retarded.
I feel like all crew is reunited, like the core guys from the Moralis. It's exciting. Maybe we start up with Phil, because Phil is you haven't been on our show for a while. I mean, never actually. So your first time.
And let us know
what's your background and then maybe about a little bit markets as well, because I think it's panning out differently than most of people expected. So what's your insight? Yeah, let's go from there.
Yeah, let's talk about it, right? So for those of you who don't know me, I'm Phil, formerly head of research for Moralis, and now a free agent looking for my next adventure, my next home. And so we'll see where I land, but I'm definitely staying in crypto. My background is in crypto, as you guys know. I have a master's degree in blockchain and digital currency, and that's at the University of Nicosia. So that's a little bit on where I come from and why I'm involved in in this podcast. The reasons why I'm involved in crypto, obviously, much more vast, and why I got started in the first place. But that said, I mean, let's talk a little bit about the current market. This is the first time I've done this actually since I, because as you guys know, I did live streams basically multiple times a week for a few years on end, and I've recently had a little bit of a break from that, but happy to be back here with you guys.
Can you ask the train or the fighter pilot?
I'm sure you guys can hear that. So I live
next to the airport.
Yeah, well, actually, this is
military. You live on a military base. There we go.
We had a military air show in the town that I live in this past weekend. So if you're from the U.S., you might know where I am then. But that's periodically you might hear a jet go overhead, and they're pretty loud.
Yeah, they shit out of
jets. Those are
the noise reduction software going.
Yeah, I thought living in Ukraine is rough.
I might mute it. They've been so loud. We actually went to the air show the other day. It was totally awesome.
Definitely clip that, Theo.
Okay, we'll do.
But all right. So yeah, no, I'm curious to hear where you guys are at. So given the fact that I've had the luxury of really taking a step back here these past couple of weeks, I would say, given the number of cycles that I've been through and the things that I've seen, that it feels pretty on track right now. The Ethereum price and maybe subsequently the utility asset price of some other networks as well hasn't really caught up to what I expect. But 108 per Bitcoin, we're virtually at an all-time high right now. Like, what more could you want in that respect? Granted, we need another leg up before we're going to see that major appreciation in those other assets, but that's just a matter of time. And, given all the uncertainty in internationally, without giving any details on that, but then also politically in the U.S., I think things are proving to be relatively resilient. And also, I think we need to pay attention right now. And this is something that was in Theo's notes before the stream here. pay attention right now to the fact that major entities are hiring crypto professionals right now. Okay. And that sheds some light into what's going on behind the scenes. Okay.
I might actually make a LinkedIn profile. Like I might have a little nose around. Like if Singapore offering jobs, it's great, isn't it? Like in the future, they're going to be looking for people with crypto natives. So as they say,
absolutely. And that's in my resume that I'm a crypto native. Absolutely. And Justin, if you make a LinkedIn, go ahead and connect with me because I'm trying to build out my network on there, specifically in the crypto realm. What I keep hearing from people is it's all about who you know. So I am curious who some of these larger, let's call them traditional finance entities are hiring when it comes to these roles. I mean, I may apply to some of them myself, frankly, but I know that even MasterCard is hiring a vice president of crypto.
What are the benefits? I mean, I've already been president of a few multinational corporations, so vice president seems a bit of a demotion for me. But what are some of the benefits? Do you know any of the benefits? Do I get healthcare, Lamborghini, anything like that?
I mean, you get a lot of that stuff, especially this MasterCard job in particular. I think is going to give out mad benefits. But you got to figure anything VP level at these major corporations have really good perks. But yeah, I'm not 100% sure what they're looking for. And you guys know how it is. Like, I am in this industry who I am. So I'm looking for somebody who really wants what I bring to the table. You know, I'm not necessarily trying to be somebody else in order to get hired at like a large corporation. I'd much rather stay with smaller crypto companies and keep help building them up, which I may do, frankly. You know, I think that there's a lot of success coming in both areas. And the key is to stay in it, because if it feels arduous right now, then that means that the big money's doing their job right. It doesn't mean that anything's wrong.
Actually, the other day I spoke to NFT Eve, so you may want to connect with her. She has, I guess, like a volunteer position at some TC startup scene. So there's like I don't remember. It was somebody
about that,
Government Blockchain Association.
Yeah, something like that. So
BBA?
like every month or so, like people gather there, pitch their ideas.
She's like the CEO now.
And who?
She's like the CEO of the GBA now, the Government Blockchain Association, I think.
I spoke to her, so it's not CEO. I think she has the connections and stuff. I'm not sure what the specific role was, but it was like a voluntarily. So I've never heard of.
But if it feels like a long slog, that just means that we're just in an 8-year bull cycle. Like it just means I mean, Bitcoin at 108, ETFs. There was no hype about the ETFs. Like everything that people said the ETFs were going to do for crypto, they did, and then they did twice as much. Like it just feels so stable. It feels like there might be low morale on like the X feed, but like overall, like we picked the right industry to get into. And there was recently like this report, this yearly crypto report, and they're talking about all sorts of mainstream interest, mainstream adoption. So it really is time to create a LinkedIn, or just not time to feel sad anyway.
Right. But yeah, let's be clear. Like this is different. This is different than, mainstream entities might be interested in crypto. No, this is mainstream entities are actively interested in crypto and hiring in order to get into crypto in a strategic fashion. Okay. So whoever gets that job as VP of, asset management and growth for MasterCard, their job is going to be to figure out how can MasterCard profit from the fact that they're going to need to move a certain amount of their business, eventually all of their business, into permissionless systems. And the reason that they're going to need to is because if they don't, they'll lose out to somebody who does, like even MasterCard. The reason why is stupid simple. It's right now when you go to the grocery store and you swipe your credit card or your debit card to buy something, the one that says MasterCard on it, they maintain a system on the back end that makes sure that the accounting is good, that makes sure you have the money and declines the card if you don't, et cetera, et cetera. That system costs them millions, hundreds of millions of dollars per year to maintain. If they move that system to a permissionless version, it will all of a sudden cost them zero to maintain. Now, granted, they'll probably run their own nodes because there's advantages to that. They can mine, they could do their own validation, they can do all of this. The point is they wouldn't have to. Because they wouldn't have to own all of the accounts, or maybe they would. There's 100 different ways you can configure this, and that's what those people are going to figure out. And they're going to figure it out because it's going to determine which corporations run our daily lives going forward, or provide the services that are necessary to our daily lives going forward. So that's what we're getting ready for, guys. And it's hugely bullish. That's why I can't be anything but bullish. But why I think we're seeing like, a little bit of a delay with prices, even for good protocols, is there's a burning question. And it is, what protocols make sense? Which ones actually add value to that future that we're talking about? Like, which ones actually facilitate that transition or provide a needed service when we make that transition? And I don't know that I could answer that question without doing a lot more research. Maybe it's something I should try to answer, but that is why I think a lot of these old protocols, even ones that are still good, they just aren't valued at that much, because nobody really knows what the value of Uniswap is going to be in that world. Like, after that transition happens, nobody really knows how much Uniswap is going to be used. Like, could MasterCard deploy their own exchange protocol that's completely different and frankly revolutionary and renders Uniswap version 3 obsolete? They could. I take somebody smarter than me to build it, but it's possible. And I think that that's what we're on the precipice of. And it's all of a sudden, on-chain protocols, even really good ones, are right now need to get ready to compete with mainstream entities and all the talent that they recruit. The good news is, for blockchain investors and people that use blockchain every day, the final outcome is mass adoption. And that's exactly what we want. And that's going to be realized in terms of asset appreciation for token holders. We just don't know which tokens. And I think that that's the main delay with asset price, especially if you're like holding OG protocol tokens like I am. I hold 1inch. I hold I know some people are holding Chainlink. I don't hold Chainlink, but that's a good example.
Usually when it comes to I think the closest relation to crypto should be like a .com bubble, like a lot of new companies. And what can we say? Most of the first to the market failed. Either it's social media, tech companies, of course, some like Oracle or Amazon, they stick around. They make necessary changes. They adapt to the market. But most of those companies burn. So maybe the tokens that we are thinking about or you are thinking about, they're not even released yet.
That's a really good example. And I love to think about Amazon in the context of that, because Amazon, they launched as a bookstore, right? The most successful online bookstore was the original thing. But did they really change how bookstores function? So I'm coming from an American perspective. And in the United States, brick and mortar bookstores are still a thing. Barnes and Noble probably being the most prolific of them, but it's still like a viable business. People go there to buy gifts mostly. They have a lot of like gift stuff, but they also have a lot of books, and it still stays open. So Amazon didn't put existing bookstores out of business, at least not across the board. Yeah, there are probably some bookstore chains that did go out of business because of Amazon. But the point is, they invented their own thing. They invented their own thing by duplicating an existing thing. Okay. So it is possible in my mind that we see a protocol right now, or that there's a protocol right now that doesn't seem in our minds to really add value, but actually does long term. And it's because what they really do isn't appreciated yet. You know, it could be that AAVE is this thing. You know, I don't think that there are a lot of people who are saying, you know, DeFi experts, oh, put all your money on AAVE token, put all of it on AAVE. Maybe I would be one of the people who would say, you know, AAVE, I think that's probably a good long-term hold. But I would say that because of this exact reason. It's like, okay, what if 20 years from now, all home ownership is tokenized, all of it? So if you want to take out a home loan, you just throw your tokens into AAVE, and in one day, you have whatever home loan you want. You know, you got to pay it back. Otherwise you're going to lose equity in your house, but it's perfect. It could be a very, very useful and well-functioning system that is kind of based on what we currently have. That isn't anything new that they're probably already capable of. I mean, they would just need to support the equity token that you would have for your house. But it's stuff like this that keeps me holding utility assets long term. If you look at the chart, you see that with Amazon. There was a time where Amazon, it looked like the price stock was going to zero, but it still went way back up, 10x or more past what it was at that time. Are you pulling up the chart right now? Yeah, perfect.
82 in December 2022.
Yeah. So let me ask you guys.
No, I think he means like the 2000s when it.
Yeah, I do. Yeah, I do. Okay, so if you go see where it's bearish, no, go back further.
No, the beginning, beginning. You see the first bump.
Logarithmic.
Very first
no, not needed. It's just in the beginning. It's in the 2001.
There it is. See where it goes bearish? It loses
down
half
to 29 cents.
Yeah. That's it. That's the dip right there. And then it goes back up, and it doesn't even recover. Think about the guy who held through that dip, but then sold at the next bearish flip because he's like, it's going back down, but he's so wrong. But the more important question, and I want to ask all you guys. So AAVE was my example. I think AAVE is a good long-term hold. AAVE could be the Amazon of crypto mass adoption in my mind, because it does something really cool and really simple that everybody could take advantage of if expanded correctly. But what do you guys think? What protocol asset is good enough long-term to be an Amazon of crypto?
Let's start with Matthew.
Personally, I know you're, here comes the crazy guy. So,
No. You were just not speaking for a while, so I wanted to give you some little bit, but I assume that Dick with Butt is not the first one.
Nah, not Dick with Butt. So, the biggest issue, in my opinion, the biggest problem that there is to solve is pretty much a decentralized stablecoin that's not got a blacklist. So one that can't be like switched off at any moment. So even DAI, as decentralized as it is, they hold in their reserves, they hold USDC and USDT, and then USDT can actually turn off those coins if they wanted to. They have a blacklist function. So like within ThorChain, if it's a massive gamble, but if it works out, it could be the biggest thing in crypto, I think, which is a fully decentralized stablecoin. It's got no admin keys, no blacklist function. It's gone to zero twice. I don't know. I think that could be that's something that just seems really crazy to me. And the fact that people working or seems to be working in the background to maybe
what about
that. It's pardon?
What about FRAX? So I'm not necessarily saying FRAX is the best thing ever, but isn't it what you're talking about? It's decentralized.
It's similar, yeah. But FRAX, they were trying to back everything with FRAX, weren't they? They were kind of doing it
I think there's some ETH in there. But
ThorChain is more Sigma. ThorChain is more Sigma. Like FRAX is a bit beta male.
No. I'm not knocking it. I'm just saying that whoever's able to pull it, maybe it's FRAX. Who knows? I mean,
like the fact that everybody uses these stable coins and they're perfectly happy with the centralized nature. It's almost mind blowing, right?
Legacy.
Yeah, well, I mean, until something happens, imagine.
This holding the peg pretty good, right? Like if somebody wanted to pay me in this today, I'd be like, sure. It's like less than $1,000. Sure. Why not? You're not missing out on anything. You can trade on the open market. But what about
if it breaks the peg, then what? That's my main thing. So if it breaks the peg, then what?
Yeah.
Then who's going to?
It hasn't like when it does that, it comes back pretty quick. I mean,
yeah. But say something happens and it doesn't bounce back. Who's gonna?
Yeah, I wouldn't want to take my whole year's pay in it, I suppose.
Exactly.
But,
so if you've got a stable coin that's totally decentralized, that's got all these features, that hasn't got a blacklist function, and not only that, but it hasn't started at a dollar peg and then it's fluctuating from there, and people are just instantly at a loss. If it's starting from zero and creeping up, you've got a whole community there that would be willing to back the peg if there was an arbitrage, as well as all the bots that are running in the background, or that will be.
That's a nice chart.
The stable coin is
like,
not the coin that you want to have as a community coin. It's a coin that should be a function of math that's backed up, or like a stable coin as a community. For me, each time when you mention X or
not necessarily as a backed as a community, it's basically the same as MakerDAO's DAI, but it hasn't got all these extra added risks. And
do you mean like collateral? It's supposed to be collateral backed. Is that what you're saying?
Well, there's some kinks that have been worked out, so you could see that people have shut down the forked over version of the Maker contract, but then people, I don't know. It's really kind of deep to go into, but
it's a really nice chart, man. It's a really nice chart, and like you could say the same thing about Amazon. You could say like, oh, who's going to wait 3 days for a book? Like, you could get overcritical and then you miss your chance to like have an open mind and like invest in the right thing. It's a really nice chart.
I'm not saying it's going to happen or anything. I'm just saying that, in my opinion, the biggest thing that could happen to crypto would be something like this. That's just if it works out.
So Matt, you were saying this old whale had moved $10 million in the last week, and you were wondering if that was Richard Hart, right? So
no, that's a speculation going on within the ecosystem. So
but
basically,
it was Richard Hart.
Well, he has been he was around in that era. He was mining Bitcoin from his computer in 2011, and he says it, and he's got I don't know. Who else
does he have proof? Has he
he hasn't come out and said anything. It's people have tracked it down, and they've basically put two and two together, and who could it possibly be? So I mean, people have been saying that it's Richard what's it called? Thingy
Roger Ver.
That's one, yeah. I don't know.
He probably spent a lot of his original Bitcoin hiring devs for his projects. I mean, he's made so much heat, it doesn't matter, but I'm sure he did.
Who knows? I don't know.
Okay, so we have Matthews.
I think he's a good dude.
We had Matthew's answer. I don't know, Matthew. I mean,
hey, I just said what could be the biggest thing.
Yeah.
And it's a total gamble. That's just my opinion.
Yeah, and I would you usually say never say never, but I the way how the hex was brought into the existence, the way they forked now the pulse chain, and it's fucking fugazi. It's like community craziness. For me, all the respect.
It's wild, right? I don't think he should have. It was all marketing. It was interesting marketing. Honestly, the marketing behind Pulse Chain,
I hated it.
Well, here's why it failed.
Didn't stick with me at all.
Here's why it failed. It wasn't the first one. We had already had an example of forking the Ethereum blockchain, but it went largely unnoticed, and it happened a few months prior to the Pulse launch. A few months prior to the Pulse launch, Ethereum switched to proof of stake. When it switched to proof of stake, the proof of work chain kept running. But the proof of work chain was now a new forked version of the chain. And we had a real life example of exactly what was going to happen with all of the tokens as soon as Pulse Chain launched. And most people didn't pay attention to it, but you better believe that anybody who was watching closely enough could see that. And I talked a little bit about it. And I did some demonstrations. The week that launched, you could go on the proof of work Ethereum, where all the stable coins have been rendered worthless. And for about $40, you could get 1 million stable coin. So I still have $1 million in USDT over on Ethereum proof of work because it's not worth anything. But I just wanted to have $1 million in USDT somewhere, so I did. I mean, technically, you could fork the any chain
don't
you
have the
want.
community that Hex has, I guess. That's the idea.
You don't have $1 million in
That's
USDT.
That's why it actually, like, I like Pulse Chain a lot more than I like Ethereum proof of work. Ethereum proof of work is garbage. There's no point you should use it for anything. But Pulse Chain, maybe there's something there, especially long term. I own Pulse. I have some liquidity pools over there. Nothing impressive, but some.
It's hard to get in and out of Pulse, right? Like you can only bridge from Ethereum, I guess.
Well, so what I recommend doing is just go through Pulse because Pulse is cheap and the liquidity for Pulse and central exchanges is like pretty decent. So whatever money you make, just sell it to Pulse on chain, and then.
I don't think we've got any major listings at the moment.
You have, I think, MEXC.
No, they delisted.
Oh,
Did
they.
they?
Oh my God.
That's the thing. But then we've got Binance with all these bloody.
You got the Bitcoinery. That place is reliable.
Yeah, what's Bitcoin Tree?
Oh, Bitcoinery.
Bitcoin
I have
Try.
no idea. Oh, Bitcoin Tree.
Yeah.
Sounds legit.
I think I've used it. I always check out those
Bitcoin
scamming
Try.
exchanges because, like, that's what's so great about Bitcoin. Like, register at a scamming exchange. Use like a throwaway email or something, and then, like, if you want to trade on it, send over like $25 in Bitcoin. Like, what are they going to do? They could take your $25 in Bitcoin. Yeah, you could lose your $25, but more often than not, the exchange works fine for small amounts, and you could totally test it out. I haven't tried cashing out with any of them. That might be harder.
That's where the problems emerge.
Trying to see if I get drained here.
Back in the day, they were all scammy exchanges. That's what, like, this is something I could say stuff that I wouldn't have probably said when I was head of research. Back in the day, there was no such thing as a crypto exchange you could trust. I mean, there still isn't really, right? But it used to be there was absolutely nothing. Like, we would use Cryptopia, which was hacked abysmally and went under. There's one that's still around from back in the day. I forget what it's called.
I think you mean the Delta.
Oh, that's not even as old as the ones I'm thinking of here.
Oh, Ether Delta, not that old. Okay.
No, it's not, because Ether Delta is after the launch of Ethereum and then Ethereum smart contracts.
Okay.
These exchanges are before smart contracts. So, like, Cryptopia is from those really early days. So is so there are a few that are around still that were kind of around back then, but they were completely different, like Poloniex. Oh man, there's one in particular that's on the tip of my tongue that I can't remember. I bought my first like meme coin on it, and it was in the early days. Meme coins were their own blockchains because you couldn't have
Bitcoin forks
without its own blockchain. The first one I bought was BIGUP coin. And the cool thing about tokens back then is they didn't just have names that were memey. The tokens were actually coded to do things to match their memification. So BIGUP had per wallet inflation of 100% per year. So let me explain. This is like completely insane. Nobody should ever make a cryptocurrency like this, but they did, and they launched it, and it was traded. It doesn't mean that the annual inflation for the currency was 100%. No.
Always less.
It meant that if you took your wallet and you staked it for 1 year, you would have double the amount. But that was double the amount based on a projection of a certain number of active stakers. The truth was that because the number of active stakers was actually much less than that, especially after the token had failed for a while, you could double your money staking it for probably about a month. And I actually continued to stake and sell BIGUP on weird exchanges, like $20 at a time for years after. Because I haven't now in probably 4 or 5 years bothered with this old cryptocurrency. But that's how it was back in the day. So we've already, in a lot of ways, seen the rise and fall of different narratives. And like, what has staying power? What has staying power is interoperable assets with utility on multiple networks. And protocols which live on multiple networks where the asset maybe only lives on one network, I think that those might actually be okay holds too. But that's what I would be looking for right now.
Protocols
I would be looking for multi-network protocols.
Chain
So what about
protocols?
What about omni-chain solutions like ThorChain?
There's only one omni-chain solution.
No, that's good.
ThorChain.
Yeah, I like ThorChain.
Because it's trying to, the idea is that it's trying to connect everything. So it doesn't matter who like raises or falls. It's like S&P. It just rotates out the chains that die and rotates.
What is crypto? Crypto is a rotation from one thing into another. I know there's a technology side to it, and there's like part of the interesting thing is how the capital rotates.
And also, when we spin back to our previous question about the stablecoin, so now ThorChain has the app layer going. They have launched the first couple of apps, perps, and you can now order book. That's totally on-chain order book, so it's something different. And they will launch.
You still know about ThorChain as an on-chain order book now?
Yep.
Yes.
So they have there's ThorChain, and on top of ThorChain, they have the app layer, Rujira. It used to be Gujira. So on top of the Rujira, they have the order book already ready and perps as well. Although I tried it out, it's super clunky, but it's the first iteration. It's nothing like Hyperliquid yet. But they are going to have so you can go actually Rujira.network if you want to show off the apps and stuff. But they're going to launch Rujira.network. So they're going to launch the BTC-backed stablecoin, just like MakerDAO, but just with BTC. And on top, if you go top, and you scroll through those, there's perps, and then there's upcoming apps, and they will have the BTC-backed stablecoin.
Hello.
And also they have liquidations protocol, so you can bid on stress assets. So even if those BTC stablecoin positions get liquidated, you can bid on. You can get.
So these aren't launched yet, though. This is all grayed out.
Yeah, grayed out.
Okay.
They're building slowly.
So they have a BTC-backed stablecoin.
There will be, yeah.
Okay.
And also they have USDC.
It'll be interesting to see how they secure. So there's a problem with BTC-backed anything, and the problem is you need a network in order to secure.
That's what ThorChain is. That's what ThorChain is. Node operators will get punished if they do anything naughty.
Okay, so it's secured through the native consensus of ThorChain.
Right, exactly. It's not like a side project. It's the same thing. Even this Rujira network is like a part of the updates that happen to the ThorChain. That's just built as a part of it. It's not like
I see. So when it's talking about Bitcoin, it's talking about that Bitcoin that's actually brought in,
been secured, and
secured. Well, because that makes sense, because ThorChain is essentially a network that allows wallets to generate wallets for other networks, which makes sense.
I didn't follow that.
That's how it works. So the wallet supports the generation not only of addresses for that network, but for other.
I've had a similar experience. Like I connected to ThorChain for the first time, and suddenly I had a new address for all these different.
Wait, what do you mean by wallets?
Well, he means that when you, for example, like when as I came on as a new ThorChain user, I created a XDeFi now called Control Wallet, and suddenly, yes, I was connected to ThorChain with this address, but suddenly I had all these other addresses: Ethereum, AVAX.
So,
but these are the addresses that Control Wallet gave you as well.
It's not a part of the protocol, you might say.
No, absolutely
Phil,
not.
You would say that maybe that was an over abstractification.
No, it's not a part of the protocol. It is not.
And here's why. Because in order for that same set of private keys to unlock those assets and to allow interaction with those assets on chain, the address actually has to be generated in conjunction with the protocol, because it's not just you that has access to those funds once you've deposited them. It's the pool as well. So the creation of the liquidity position necessitates that there would be access to that address by the protocol directly. And here's why. Because on Bitcoin, there's only UTXOs. That's it. There's no accounts.
Yeah.
Like this concept of accounts that we have in Ethereum is like it's like a benefit of EVM.
Like a metaphor. Yeah.
Yeah.
Not the same with Bitcoin. Not the same at all with Bitcoin.
Right. So how do you create functional accounts within a UTXO system? Well, practically, you have these addresses which are permissioned, and it has a permission for the owner, which is you, but then also extra permissions for the network. So is there a sense in which Bitcoin addresses generated by, let's say something like, just a general Bitcoin wallet, is that more secure than an address generated by a Thor wallet?
Wait, I'm super confused. What do you mean? What's the best drawing tool on the? It's Paint, I guess. So I'll just do fast.
Get the whiteboard out, Phil.
GPT. Yeah, I'll do fast whiteboard how ThorChain actually handles that.
You got to share your screen, Coke.
I will. I'm setting up my Paint.
He's just putting his private keys there on the screen so we can fork them.
Let me see, boys. Let me educate Phil a little bit. No, I'm kidding. I'm needing share screen. Let's go Paint. So I will make. So this.
I still don't see it.
Oh, you have to put it on screen, no? Oh, wait, what? Share screen. Yep. Share. Paint. Yep. Oh, it goes away right away. Maybe you have. Does anybody know an app online that is
just Google Draw on screen.
Oh, okay. Whiteboard. Let's see. Google Draw. Let's see. Google Draw.
Is there an app called Google Draw, Phil?
I think so. I'm clicking on it. click.
I just draw. Oh,
you'll just apply it at Google Draw.
That's right.
Head of research.
Got it. Can I draw now? Oh shit.
Oh, I guess you can draw on here. It's not very good drawing thing.
It's okay. We'll edit this part out.
Yeah. What's the real one? I need to give me something. Oh my god, how hard is it to find a decent drawing app?
Okay, I'm loading up Google Draw here. I'm going to draw for you.
No.
Okay.
I mean, you get pen and paper.
A Bitcoin-backed stablecoin. I mean, has that offended you in some way, Phil? Why are we getting the lecture about like how that isn't real? Are you trying to say it's not real?
No, I think it's fine. I think that ThorChain's consensus is sufficient to secure something like this. I mean, they had a hack, but you learn stuff through that, and that's going.
I mean, smart contracts always have a bug. So, but let's go through fast consensus of the ThorChain. So you have those native assets. So it can be BTC, it can be ETH. Oh my God! Don't look. So and it's pooled against RUNE tokens, same amount RUNE, right? And so this is 2/3 of oh shit. So this is 2/3, and now to manage those or nodes actually have to put out the same amount RUNE here bonded. So this is it. Let me take How is back? How is delete? Oh my God, I'm using
the
that.
bottom one, the little arrow at the bottom on the left.
I mean, I will say that ThorChain is the only protocol that benefits from this dilution of there being 2,000 blockchains. Because as blockchains come and go, then as the capital rotates, all that volume gets paid to the node operators and the LPs. You know what I'm saying? So it's like there's this like meme of the soaring off the branches, like Solana are trying to soar off the Ethereum branch, but they're actually also soaring off themselves, and it's this hyper competitive thing, and that's why we don't see alt season. But ThorChain, you can.
So we used to have really strict security budget, but now we kind of relaxed to make more room for the app layer and stuff. So imagine you have BTC ETH and RUNE LP, then you have to have exact same amount of RUNE from node operators to secure those positions, and they are the guys who go and make those transactions happen. And how it works is that if you want to interact with ThorChain, you just connect your, for example, BTC inbound, and then you will tell the ThorChain this is going to be my Ether outbound. There is no need for like other assets to, the wallet jargon that you tried to tell us, or what did you mean?
Accounts or whatever.
What I meant was when you have Bitcoin transaction, what you actually have that gets spent as a balance is an unspent transaction output. That unspent transaction output needs to be signed by the private key controlling the address that are residing within. So how?
Okay. So I think I know what you mean. So the node operators actually every 3 days there is going to be a like little mix-up. So we kick at least 3. So worst performer, the oldest, worst performer, the oldest, and who's the third one? Wait, let me check. What's the? I'll just go fast. I'm so sorry that I don't remember the third one. See, I'm going.
So welcome to the Moon Boys podcast. We haven't
oldest and the lowest bond. The lowest bond as well.
Gorbagana chain. We haven't discussed.
So there's
Solana ETF. We've gone into some like sweaty technical thing.
Yeah.
As a day trader, which isn't the best thing. I mean, we're trying to clip farm here. We're trying to content farm. Like someone insults someone trade live. Let's lose money together. Come on.
So anyway,
don't do the insults. Like
anyway, what I want to show Phil is that those 120 nodes. So as I told you, the oldest, the lowest bond, and the most slashed, they go out, and this function happens every 3 days. And the idea is to give the node operators. So at the moment, the maximum could be 120 to have them in rotation. So it's harder to take over the network, right? To then get out those BTC and other assets that are in the LP pools. So how does it work is that the node operators create a multisig between each other, and all those bitcoins are in the new Asgard vaults. And every 3 days, so they own the bitcoin. The network owns the bitcoin. So that's how they can. So that's how they can.
So what gets put in the LP is effectively a wrapped version of it. It's a token granted by the ThorChain network that is different than the token that's cool.
In LPs are real bitcoins.
Well, no, I understand that. But here's practically what I'm saying. So when a liquidity pool is interacted with, what I mean is when somebody places a trade for one asset and then uses a liquidity pool, they put one asset in and they take the other asset out the other side. So let's say in this scenario, I have $30 in RUNE and I want to trade for BTC. So I deposit $30 in RUNE into the liquidity pool to place a trade. I take BTC out the other side. What I didn't for sure know, but I think I understand now, is at that point, does that publish a Bitcoin transaction to
Yes.
physically move
Yes.
Bitcoin out of that wallet and into the other person's wallet?
Yeah,
Or
yeah,
into the liquidity
exactly.
pool wallet?
You always have to pay let's say you go from Bitcoin to ETH, you have to pay both sides of network fees as well.
I mean, there's
move
nothing
the
worse
ETF,
than being curious, and it's good to always learn stuff, especially it's always good to learn stuff about ThorChain. But I actually really like Phil's initial question about, okay, if we're early and we're really early, what is the Amazon stock that's laying in the background?
Let's talk about that.
But I just
it.
the super last thing. So about the stablecoins. So the node operators create the multi-sig where the real bitcoins are held. They are called Askerwalls, and also if you wanna make your own stablecoin, you will deposit those Bitcoin into the custody of those node operators.
Are you saying that it's like auditable, and you can like audit like the real location of the Bitcoins and stuff, and it's all fully transparent? It's all fully.
Yes.
I think you can. I think you
Wow,
can.
come on. That's innovative as shit, bro. You know, there's stable
that's like
and...
MakerDAO. MakerDAO is the same way.
We should be able to see where all the Bitcoin, like if it's one address or it's a dozen, I don't know, but we should be able to see these are the addresses with the Bitcoin that's on ThorChain, and the amount there should always add up to the liquidity on ThorChain. And whether that would be kind of difficult, I mean, it takes some effort to audit, but it would be very doable.
I'm actually not sure. I'm not sure about Phil's original question, because the premise is that we're at the beginning of a .com boom, right? And I think that there's always this conflict between me and Phil, as like Phil on the one side as a blockchain evangelist and a true believer and a fundamentalist and an optimist and a technologist. And then me on the other side as a skeptic, a cynic. And you have to remember what happened after the .com boom. You know what I mean? So I think that with the ETFs and the inflows, the constant inflows into Bitcoin. Now we've got Solana ETF, very exciting. ETH has reached its bottom, surely. And the ETFs are also constant into ETH, not as much as in Bitcoin. And what we're actually seeing is a higher correlation between the stock market. There's always been a correlation between NASDAQ and crypto prices, right? But that's gonna go up. There's gonna be less volatility in the crypto market. And what I'm trying to do, really, I'm just here for the lols. You know, I'm here for the meme coins. I'm here for the pump and dumps. I'm here for the news and the short-term speculation and the ups and the downs. I think Bitcoin could easily go to 200 in the next 12 months. Easy peasy, right? There's a lowering of liquidity, which means there's a lowering of short-term activity. There's just long-term accumulation. And I'm trying to make money before the .com crash, just to extend the .com metaphor. I mean, I think that we're stuck in this legacy system until something really bad happens. Like I talk about legacy system, it means like nothing's really going to change. Like,
it depends on what you define as really bad, right? So there's something weird that's been going on in the United States for like the past 10 years. Like basically nobody's paid on their student loans. It's hundreds of millions of dollars, billions probably. And the reason nobody's paid on them is because there was this big fight between the Democrats and the Republicans of the U.S. on what was going to, like, what type of a debt forgiveness or something like that they were going to offer. And the Supreme Court said it was unconstitutional. It's just the whole thing. Bottom line is nobody's paid. I keep thinking, like, how does this problem get solved? You know, somebody like me, like, I've got some student loans, but I'm not really worried about it. Like, plan on working hard and making a good income throughout my life. If I have to pay them off, I can. But that's not going to be the case for everybody. And what the answer is...
We do go on tangents, don't we? I mean,
this is what's going to happen. This is what's going to happen. With everything that nobody's paying on because government's pushing it off for forever, I'm sure that other countries are doing similar things. The monetary supply is going to inflate to such an extent that amount of money is not important anymore.
Oh, because it's linked into consumer debt. You're saying that consumer debt might be the final brick that.
No, I'm saying that governments are going to inflate their own money so much that consumer debt goes down. I'm saying government and consumer debt by printing money. They're going to do it steadily and for a long enough time that and like so that's
no
like
big apocalyptic event.
No, I don't think so.
Degeneration.
I don't think that there's a big apocalyptic event where like today cars cost $40,000 for a family car, and then tomorrow they cost $400,000. No, I don't think that ever happens. I think it's
you just kind of miss. I mean, it's apologies, I wasn't clear. I just think there's no point. There's no point trying to find that Amazon because you'll probably lose. I just think these alts continue to underperform. You can't. I mean, if you load up the top 400 to 500 crypto bubbles in the last year, they're down, whereas Bitcoin is up 75% in the last year. I just think there is no point in believing in blockchain and people having secure data that's private. Like, which world are you living in? Because I live in the world where like Facebook gets hacked and companies mine data.
What's secure data that's private? It's the same answer you had since the beginning of computers. Buy a freaking hard drive and put it in your basement. Don't connect it to power unless you need to. That's secure storage. Make sure you have a couple copies because if your house burns down, you'll lose that too.
I'm just here for the. Even if they did print the money, and there would be a time where the stock market would just be like, okay, the stocks don't go up relative to money printing, so I'm going to stop buying stocks, and I'm going to start. So even if it was like just the US debt going up and getting out of control, what I'm saying is I'm here for the lols. I'm here for the Gorbaganas. I'm here for the whales pumping up using leverage, the memes. I am a ThorChain believer. I do think Bitcoin is going to 210. I do think we're in a bull market. I just think that speculating on alt technology and like pretending you understand it and hoping that like these institutions that hold our data and that are going to do it in a more secure, like accessible way or something, I don't think it's worth it. I'm here to sort of like short alts relative to strong coins like Solana and ETH, and then I'm here to like and Gorbagana and just the lols and like stacking.
Are you shorting Bitcoin right now, even though Bitcoin's above the 120?
Yeah, I always hedge though. I try and go delta neutral. I always hedge, and I'm overall long, obviously. Like I've got spot bags, and then I look at what I do. I look at the stablecoin dominance is stochastic on the 12-hour. I look for it to make it cross up. So there is like a deleveraging sometimes, and you can catch it early. And then I put more leverage onto I find weak alts. I go on tokenomics.ai, amazing website. You can see the unlocks of all your favorite shitcoins. And then you can see that we've diluted ourselves, 2,000 chains, 3,000 memes, and you can hedge and you can catch good timing and then take your profits, put them on spot, or definitely diversify. Don't listen to these blockchain evangelists, hold silver, hold a bit of property or something. And that's how I'm running this thing. I'm here for the lols. If you really believe that blockchain is the future, like XMR, like peer-to-peer transactions, those are great. Those are the kind of things where you can be more local. Think local. Think, how can I support my local economy where I work and make it so that I can transact peer-to-peer? That is good. But in terms of like, fixing these unsafe networks, like I'm not clever enough. I'm not going to pretend I'm clever. Maybe AVAX, maybe like. I'm more interested in like real world assets in terms of like anything mature like that. I'm more interested in how can people trade stocks and securities on the blockchain in a more convenient way or something like that than I am like, how are we going to make the world a fair place?
Problem. Like, how do we trade tokens once they're on the blockchain? We already know how to do that. The question is, how do we put real world assets on the blockchain in a way where they're enforced? Or they carry the force of law when they're traded. I mean, that's something that we fix in time. I do think that society needs to do that, but a lot of people do, and there are people working on it. I think that, that's basically where we're going. First protocol to put real world assets, by which I mean real estate property on the blockchain where it carries the force of law of ownership. It doesn't require any additional paperwork. That's going to be huge. And it might require some changes of laws too, but we should be fine with that. You know,
that doesn't make sense. Like, how could it even be legal to own a property if, like, you have no intention to look at it or even touch the door handle or talk to the tenant? That sounds like everyone's going to be their own little BlackRock, like asset stripping Europe. Like, it just sounds like hell. Like, the more you actually like dig into these blockchain narratives, the more it just sounds like hell and a continuation of like
here's how you
happened
do
since 2008.
You use the same systems that already exist in the banking system to create commercial paper. So when USDT issues more USDT, they don't necessarily put dollars in a bank account. They probably go to a crypto exchange and they say, hey, you guys just had a new valuation and you're thinking about doing some fundraising. What if we issue you funds against your value, and we have a bank that'll help us with that, and we're going to give you all the money in USDT that we just print out of nowhere, and it's all fine because the bank's going to get involved. Well, that might sound a little like backdoorsy and shady. The fact of the matter is that's how banks work. Like that is the purpose of banks. The purpose of banks is to create liquidity where there is not liquidity. If they don't do that, then they serve no function. So they can do this same thing for crypto assets. The question is not how do we do it? We do it through the banks. It's where do they put the liquidity? So currently, if you go to a bank and they give you a loan against property that you own, they're going to give you money in your bank account. They're going to use the banking system to provide the liquidity. They could just as easily provide that liquidity on chain in the form of stablecoins, etc. Like that's the step that we're waiting.
Okay, Phil. So we know it's going to be through the banks, and it's a question of where do they put the liquidity, and it means that there's a more efficient way to derivatize everything. Okay, so I think we've got about 2 minutes left. I'm going to just offer my final thoughts. I think if you think too much about how we're going to take this hyper-derivatized hell system we have and put it on chain, I think you miss out on shorting alts relative to Bitcoin, stacking Bitcoin, focusing on local peer-to-peer economies with privacy coins, and you miss out on building a nice ThorChain bag with RUJI and RUNE stacked and bonded. And I just think I'm here for the lols, and I'm here to actual protocols that do crypto stuff from one crypto to another. And I try not to think about the technology stuff because it super bums me out. And that was my final thought.
Lucky you didn't go get a master's in blockchain.
Lucky I didn't get a master's in blockchain.
So my dream for all of this, guys, at the end of the day, is not that we would lose the grassroots elements of crypto. My dream for all of this is that the mainstream would use crypto rails on the back end in order to facilitate their business. This gives researchers like me and others the transparency that we need in order to audit their books in real time. And that is something that I want, and for the benefit of the grassroots. But in addition to that, I don't believe in a future where every single person on the planet learns how to use crypto at the level that all of us here use crypto. Instead, I believe in a world where that's possible for people, legal and protected by governments, but it's an option rather than a necessity. So people
It'll be integrated seamlessly, in other words, like the internet was back in the day, where they stopped. Everyone was afraid of it at one stage, weren't they? And then suddenly it's like, oh, actually, he's got a business on there. He's doing this on there, whatever. He's watching videos.
And that's exactly my point.
And then everyone suddenly starts using it, and it becomes like it's like you don't even realize that you're doing it, don't you? So that's.
Exactly.
I totally agree with you, Phil. Totally agree with you.
Even more so, like the level that you and I and the other gentlemen on this podcast use the internet is beyond that of your typical person. Your typical average Joe, he's ordering DoorDash, he's watching Netflix, he's
Call of
talking
Duty,
whatever, but he's not really involved with active online communities that actually make up an important portion of their professional and recreational life. So yeah, I think that higher elite of internet user is going to easily continue in the post crypto world. It's just but no, so Justin, I don't want you to think I'm not on your side with this, because I really am. But at the same time, I'm looking forward to
Ondo is my favorite RWA platform.
Yeah,
it doesn't have any property in it. It doesn't necessarily mean that. Well, it does. It does mean they're kind of slowly onboarding like BlackRock.
So I think it's really cool when you start to when we start to see more people coming, more builders coming and everything, and everyone starts having their own spin, and they just get the ball and run with it. So if you have a look at the link that I sent in the chat here, I sort of stumbled upon this and I thought it was really, really interesting. So basically, he handles the whole crypto debit card payment, but so you're holding it in your wallet, you know, and he so I think he writes up a bit of a smart contract in order to do it, and it's super ingenious in my opinion. And it's like, I can't wait for more people like this to get involved and start building even more things, and then it would just spiral from there, you know.
It was a hard transition over to gasoline powered equipment when everybody was using hand tools. But look at the stuff we've built since. It's going to be a painful transition over to crypto rails for everything. It is. It's going to be really hard. Some of us can make a lot of money, I think, facilitating it, though, too. So keep that in mind. You know, companies are going to need the help of professionals with this.
Oh, yeah. Thanks so much, Phil. Thanks, everybody, for joining.
Thanks for having me, guys.
Coke, any final thoughts?
I would say crypto. We used to be scared to put in our credit card information in internet 10 years ago. And well, it was maybe more, 20 years ago, I guess, 25 years ago.
I remember asking my mum if I could put her credit card details online to buy something. She was like, "Nope, I don't want to lose any money, whatever."
Exactly. And same was 10 years ago with Bitcoin. Like, well, even 2017, if you mentioned Bitcoin to a friend, it was like, it's a scam. Don't do this. Don't do that. Now, I think it has wide validation already through the mainstream. So we are one step further on.
But the actual crypto, like the actual crypto, is going to catch on in the next few years. They're like launching a meme coin, like trading from one to another, like DeFi. I'm not so bullish on BlackRock taking their whole legacy system and derivatizing the European housing market between tons of Jewish billionaires. Like I just don't care. It doesn't.
You think BlackRock has any choice what they're doing? They're too big. When your companies are that big, they operate based on like signals and triggers. There's barely anybody there who has any free will.
That's
they
a good
know where the money is. And BlackRock it was smart of them to get into crypto as early as they did. But their goal today is the same as it's been since they started, to make as much money valued in dollars as they can from the crypto market. And that's just how they operate their business.
Maybe listen to Phil and you can get the free healthcare and you can get all the bonuses at Christmas time. You can get employed you can live in whichever country. You can get employed in New York, in San Francisco. Maybe people need to listen to what Phil's saying. It's quite interesting.
We'll see. I mean, I haven't paid for my own healthcare so far. We'll see if the next place pays for it for me.
Interesting.
But yeah, we'll do an after party on Twitter Space, I guess, if you guys want to join for that. But yeah, once again, Phil, thanks so much for joining, and everybody else, we'll see you on the next one.
Bye guys.
Bye guys. Subscribe.